But shifting focus to Aadhar housing then and trying to understand what exactly is happening in the business there and what's the way forward. And that's something that Mr. Rishi Anand, the MD and CEO of the company, is going to talk to us about. Hi Rishi, good to be speaking with you. First up, just help us understand. We are seeing a lot of these hoardings and a lot of these, big discounts and offers which are there from the real estate sector right now around the festive season. But what's your sense of the initial, trends from the festive season so far of home purchases, etc.?
Great, very good morning, and thank you for having me. Yes, we are seeing a lot of hoardings across a lot of metros. Coincidentally, yesterday I was traveling to tier 2, tier 3 cities, and I saw similar hoardings across these tier 2, tier 3 cities, which is actually good news. We were all expecting during the festive season all these schemes across the developer community, across the housing segment would come in, including the housing loans, and it is a very good sign, given that the festive season is up on the peak, and during Diwali the maximum purchases happen. So it's a good sign, and early trends look very nice. We are also seeing hoardings and advertisements from a lot of developers of good sales that have happened in the festive season, especially in Navaratras. So it's a good beginning to the festive season.
Hear that. But Rishi, the housing finance companies were counting on the PMAY 2 scheme as well, and also the affordable housing refinance scheme to try and boost the demand. But till date, the guidelines for the scheme remain pending. What are you hearing? Till when will this guideline actually come in? Because it looks like the festive opportunity could have been a lot better had this actually come about right in time.
I would partially agree and partially not, because the PMAY scheme, the way it works, and I have already in your channel in the previous discussion highlighted this. It works on a refinance model, which effectively means that while from 1st September onwards, the consumer is eligible for a PMAY subsidy eligibility, and we are onboarding the customer. The moment we have the final contours and signing of the MOU with the nodal agency, which is NHB, which should happen any day as we go ahead, these consumers would be eligible. So as far as we are going, we are informing the consumer that you might be eligible for a PMAY subsidy. But does the PMAY subsidy give you a huge upside on your incremental business? It does not, because it's a refinance scheme, and the consumer or the mortgage company I can't go ahead and commit that you will 100% get the subsidy. But yes, since we already have initial discussions with the regulator, and we have some contours on how it's going to work, we are informing the consumer that post 1st September, you are eligible for this scheme.
Okay, point taken. But, the other thing that I wanted to discuss with you is about the asset quality and the concerns which are coming in there. We understand, of course, your portfolio is largely secured, but since you're focused on low cost, low income housing segment, which is around 15 lakh rupees, is there any, any sort of signs of any pressure there?
No, so I would not say that. We've been hearing and we've been closely monitoring the MFI segment, because, when you rightly said, we cater to the lower segment of the society. But there is a very thin line of difference between what I do and what an MFI would do. And MFI is more tilted towards rural. I am more semi-urban. Having said that, we will definitely have some overlap of the MFI consumer on my book. Today, if I were to give you some numbers, approximately 3% of my consumers have an exposure to an MFI. And the good news, and we keep monitoring that, our data analytics team keep monitoring that every month on a scrub basis. The good news is that only 1% out of the 3% consumers that I have, so approximately about 9,000 customers that I have who have MFI exposure, only about 2,000 customers, 2,100 customers seem to be in early delinquent buckets. So if I were to give you broader numbers, out of the close to about 3 lakh consumers that I have, 2,100 customers seem to be delinquents, that too in early buckets. So I don't see any sign of worry as we speak today.
Okay, so you don't see a big sign of worry at the moment, at least for now. But overall, if you look at the other reports which are coming in, which are suggesting that there's high competition from banks in the prime segment as well. What's the situation in the affordable segment? Are PSU banks trying to take the market share from the likes of you?
Coincidentally, yesterday I was in a conference organized by CIBIL, and the trends that CIBIL reflected, and and we also feel that the share in the affordable segment, and here I'm referring to below 35 lakh loans, the housing finance share is increased from up 26% in the last 4 years to close to about 36-37%. And public sector banks have been more or less flat in terms of their growth in the sub 35 lakh segment. The degrowth definitely comes from the private sector. So I would not say that, the public sector expansion towards affordable, we've all created a niche in the affordable segment. For example, if I were to illustrate that, we broadly call loans below 35 lakh as affordable. And within that, loans, average ticket size below 15 lakh is low income housing. That's where we operate, where we don't see any larger companies or banks coming and operating right now.
I also want to talk about, this initial investment of about 60, 70 odd crore rupees that you had made during the COVID period for this particular app. And you did see some reduction in your OPEX and, your CI ratio as well significantly over the last 4 years. Tell me, what's the follow through looking like and how much more of an impact are you seeing?
So yes, you're right. During the COVID period, we wanted to do an IT transformation, which we did, and we moved to a consolidated end-to-end platform, which was developed for us by TCS. I think that was a call that was taken right at the board level, and we, as an organization, wanted to do it. Purpose was very simple, and we see benefits out of it coming as we speak today. Was enhancing efficiency, end-to-end consumer service. So we've seen early indicators of benefit coming out of the movement from a homegrown system to a TCS platform. And yes, that also interestingly has impacted our cost to income ratios, which today are about, if I were to compare from COVID times to today, we are about close to 200 bips down on cost to income.
Okay, point taken on that note. We let you go, Rishi. Thanks so much for making time and speaking with us. So that's the latest coming in as to how the entire housing segment and the housing finance companies industry is looking like at the moment. In terms of the...
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.